All right. Welcome back to the Roadmap to Retirement podcast. Today, I'm excited to be joined by Jon Sheldon. To give you a quick background on Jon and I met in 2012. We were both interns at Northwestern Mutual, getting our start in this financial planning business that we're in now. Jon worked with him as an advisor for a number of years and then shifted focus into business coaching, which is what he's doing now. Jon, I gave you a very brief background, but I'll let you fill in the gaps there. What should we know about Jon Sheldon?
I think you nailed it, man. I know you and I have known each other for since our infancy in this finance world, which has really been cool. And I think it's been pretty special to stay in contact and keep those friendships that at the time, who knows, right? You were an intern, I was an intern. Yeah, no, I've spent the last 12 years essentially in this world, and I'm excited to have a conversation today, man.
Great. And that kind of segues nicely into my first thought. The first topic we'd go over is starting in this business in 2012. You come in as a college student knowing very little, and then obviously your perspective starts to evolve as you move forward. So what are some things that really changed in your viewpoint since you entered the industry 12 years ago to how you see things today?
Yeah, I think the industry's changed quite a bit and hasn't changed at the same time. I started this at 25, so a little older than your traditional intern. Obviously, Alex, you know that I was in the Marines before that, before going to college. So I came into this industry with a little different perspective, I thought at least. But since 2012, in the last 12 years, technology has obviously changed quite a bit. I think that's the obvious one. And I also think that's one of the hindrances of our industry. They're slow to change with technology. That's where that emergence of fintech and insurtech have come from, which are really honestly exciting. And a lot of bigger companies are really hesitant to embrace that type of stuff because they're really embedded in the old way. So I think it's like that two dichotomies, honestly, of tech can absolutely and has absolutely changed our industry in a lot of ways. And and a lot of companies are super hesitant about it and advisors because I think they fear what they don't understand. At the end of the day, what will always stay the same, in my opinion, and why financial advisors will exist is the majority of the value of a financial advisor, in my opinion, is the relationship. It's not the performance of your portfolio. It's more on the suggestions and planning and being able to listen effectively and then talk you out of bad decisions, right? But that's what I've noticed.
Yeah, absolutely. And on the technology point, one of the things that I think is interesting is we're just old enough or been doing this just long enough to remember when you'd have a fintech program that would produce a huge report for a client. You would print off like 90 pages, you say, here's your financial plan. Good luck, or let's talk about this in a year. Whereas in today's world, every fintech company, and I won't name any specific companies, but it's become more of an interactive tool where you can make small adjustments to try to impact the client's future or try to get them to make small changes in their life today that will ideally make a bigger impact down the road. So technology has
Yeah.
certainly changed in the last 12 years. I'm curious to see where it goes next.
Yeah, I totally agree, man. That's a good way to summarize it. Clients can now make such fine-tuned adjustments to an online platform, right? Whether that's run by AI or a bigger firm, just a fintech, that they couldn't when we were growing up in this business. And I think that's given a lot of power back to the consumer, at least it should. And that's something that I coach a lot of financial advisors on is, hey, man, they can go online right now and get a retirement proposal in 5 minutes or less. Like it's just data and a computer crunching the numbers. Since we've been in the industry, Alex, we've never actually physically crunched the numbers, right? I think that's a big misconception of what financial advisors do. There's no crunching. It's like a budget or something like that. But all that stuff has been replaced essentially. You can get a great insurance recommendation on one of the many websites that offer them. That's going to be pretty accurate. Like I call it 85 to 90% accurate to what you actually need, which is crazy. It's exciting. And I also get the threat that a lot of older financial advisors and larger firms feel that is going to come. But if you embrace, I believe, more of the reason that financial advising actually exists and financial planning does, I think it's more easily palatable and better for the client.
Yeah, and I think that's a big one. On one hand, is what I said before about how the technology has evolved in a way where we have this interactive tool, which is great. On the other hand, I think a lot of people would start to see the AI and the robo advisors as sort of a level of competition to your traditional financial
Hmm.
advisor.
Yeah.
But I think you and I probably feel similarly on this, is there's still a role for a person. And I guess I'm curious what your thoughts are on what the right relationship with the right advisor can do and what impact that can have on the end client.
Yeah, that's a great question. I think the right type of advisor should be able to lead their clients in the direction that they have designated, right? Like any good advisor worth their weight of salt is going to be obviously client focused first, not product focused. So if we have this client and they have their goals, the right advisor is going to lead them agnostically to that goal of theirs, right? And there has to be that big enough relationship where you're able to challenge people. And that's what I always talk to people about. No offense to the clients out there. I'm a client of a financial advisor myself, but there's a reason that you're working with a professional. So one of my biggest pet peeves in the entire industry when it comes to the client's point of view is when we keep going, clients go back and forth on what is the right solution, what isn't the right solution. That would be, in my opinion, it's like arguing with your mechanic on what's wrong with your car, personally. And you need, and this goes back to that advisor, Alex. In my opinion, you need that financial advisor that's going to stand their ground and say, hey, look, this is the way that I plan. This is my interpretation of how to reach your goals, and leave it at that. Because there is, and that's how I think the industry should be. There are a lot of other financial advisors out there that if they want to plan with them and they connect with them better, then I would highly encourage them to do that, right? You should have this symbiotic type of relationship with your clients that you understand vividly their goals and aspirations, and you're actively trying to solve that. And that's the right advisor, right? Is to always have your client's best interest in mind, regardless of product or solution.
Absolutely. I think you answered a lot of my next question would be, but what's the criteria that somebody should, you and I know a lot about this stuff, so we zero in on different things that the average person probably isn't thinking about. But when selecting a financial advisor, if you know nothing about this industry, where do you think is a good spot to start, or what's a healthy criteria for vetting people?
Oof. Yeah, that's a good one. I think that there's obviously an experience level there. I think designations, they're called. So getting a CFP, an RICP, a CLU, a CHFC, these are all letters right after your name, but if they do symbolize something. Honestly, I hear the only people I ever hear talk down on getting designations are advisors that don't have any. That's it. No, it is, man. Like nobody should. No, but that's true. I think that's a big part of it. Designations signify that you've taken the next step. Most people don't understand that financial advising is not like being in an accountant, right? Where most people wouldn't work with an accountant that doesn't have their CPA. You do TurboTax or you work with somebody that's a CPA. But yet in this financial services industry, clients gladly give their money to people that are super qualified. It's called what it is. Now, does a designation totally signify qualification? No, I don't think so. I think level of experience obviously helps a ton. You've got advisors that have been in the game for 20 years that don't have a designation. Do I think they're a bad advisor? No, hell no. But I think that it adds an extra layer of dedication to your craft that's beyond just the state level passing of your certifications, right? And because that's all it really takes. Like you don't need to go to college to be a financial advisor. It's one of the biggest things clients don't understand. I didn't go to college for financial planning. I went for history and business management, right?
Yeah.
Right, here I am. Do you need it? No. Will it help? Absolutely. Right?
Sure.
Absolutely.
It's definitely one of those professions where none of us, no 17-year-old kid is saying, I want to be a financial advisor, or maybe very few are. So everyone kind of stumbles
that's a good point.
into this industry in a different way. And I think a lot of us find it to be a great career and rewarding, but others maybe not. In the interest of keeping things positive, I'll make this part very short, but what is a red flag that would be a big turnoff if you were vetting a financial advisor and you found out fill in the blank that would make you not want to work with them?
Yeah. Again, I hesitate, and being a young financial advisor at one point in time myself, seems like contradictory, but I think time in the business does help. I'm a much larger fan of teaming and getting into the industry that way, like coming up on a team and leveraging what in the industry calls is joint work, but there's a much bigger and deeper level of teaming that we can explore. But that's what I would say. Like in the beginning, if you're not working, if there is an advisor sitting across the table with you and they have been in the business less than 3 years, we'll call it, I would be pretty hesitant unless there is another senior advisor in the room that's been there longer than 5. And there's a couple of reasons for that. And this is just how almost every company works outside of independence, is you have contract minimums, right? And I know a lot of excellent advisors. I would have called myself obviously an excellent advisor back in my day, but that doesn't change the fact that there are some very real contractual obligations that you have to the company that you're employed through with the larger companies, right? So I think that's one of my things. And I think the easiest way to get around that is simply to do joint work, which most of the companies, in their fairness, promote heavily. Okay, do joint work for the first couple of years, like meaning partner with a senior advisor for your client. It's the best thing for your client. And that's my biggest red flag is if you're sitting down with an advisor that's been there for a year, 6 months with by themselves. Like a carpenters have apprentice and they have to do apprenticeships for a couple of years, right? It should be the same. It should be something very similar in this very complex industry called finance, but it's not.
Yeah, I think experience in any field is only going to help you. Nobody wants to go see the heart surgeon that just graduated yesterday, and maybe it's similar in every industry. And to your other point, we could do a whole podcast on conflicts of interest, but we'll leave that where it is for right now. So at this point, I guess I'd like to segue into your current business, which is business coaching. And I think it's in a lot of ways, your career as a financial advisor must have prepared you for that, because the conversations you're having with your clients about their retirement plans or financial planning in general does have a lot of the same underlying themes that business coaching would. But if you'd like to speak to why you decided to make that shift and what kind of got you going in that direction.
Yeah. So I used to, back when I was personal financial advising, I was mentoring a couple of the young advisors. That got to a point where it seemed valuable enough where the company I was working for offered me compensation to do that, which is really cool. That was back when I first started doing that, 2014, 2015. Then throughout the years, I've always gotten a lot of personal gratification with teaching, leading, coaching, consulting. And that's really where I came into my own when I was in the Marines, honestly, was that next level when I had progressed through the ranks a little bit and got more into that leadership role, being a squad leader, that I found a lot of passion around and I really like doing. And that's how I view coaching in a lot of senses, is that you're taking somebody from where they are and just trying to make the best version of themselves, but you're trying to make them the best version of themselves. And whatever topic that might be, like health or fitness or business. I'm a business coach, so it's mostly focused around business, but there's nothing that doesn't coincide with each other, right? If you got business problems, that can be traced back to home problems too, right? So tackle a bunch of stuff, right? In the financial advising space, I'm a coach consultant. I spend most of my time working with financial teams. It's when there's this term called ikigai. It's Japanese. It's basically your life's purpose. I really connect with that aspect of it, and finding something that brings you purpose, right? And that's what I think that coaching does for me, is it brings me purpose. It gives me all my energy. And when you find something like that, I think you should go for it.
Seems like a very natural transition. And one of the things I found interesting talking to you, not on a podcast, was we're talking about your way getting into it. And to me, when you said, "Hey, Alex, I'm going to go do business coaching," to me, knowing your background, it seemed like it'd be natural just to go coach financial advisors specifically. Mm-hmm. And I know you've told me that you actually get a lot of joy out of it and find a lot of opportunity with the challenge of coaching people that are in a profession that you're less familiar with, because it challenges you to get to know that a little bit. And I guess, what have you discovered in talking to people that are not me or not financial advisors?
There's so many different ways to do business, but all the struggles are very similar, which is, well, the most eye-opening thing to me was that everyone's dealing with the same type of things, right? But honestly, there's a lot of options when you get outside of financial planning with marketing and learning. It's a lot of learning from my point of view too, like learning how businesses are successful and then taking these industries and melding them together, right? Of being able to coach somebody through an issue and learn so much about their very random business that I was referred to, right? And then talk to a financial advisor 3 hours later and, hey, other people are doing this successfully this way. Because one of the problems with financial advisors, Alex, in my opinion, is they just listen to each other. It's literally like thousands and thousands of people just listening to the last generation of how they did stuff, making a couple tweaks. But it's always like, you go to a conference, half of the speakers there are all like, "Hey, I made it in finance." It's not, "Hey, I built Amazon." Like Jeff Bezos isn't showing up. And I think that's a shame. And that's one of the main reasons that I like working with other businesses, is because the coaching stuff is just asking really good questions and making sure that you're challenging and holding your clients accountable. That goes across any industry, but you can learn so much. I think I've grown more as just being a coach than I have, I think, in my entire career. It's been pretty awesome.
Nice. Definitely sounds like a rewarding experience. I can tell from talking to you over the years that's something you're passionate about, which is awesome. What else should we cover? Anything else we want to talk about today, John?
And I want your thoughts on it. How have you seen the industry change?
I think the fintech part's a big part of it. I think the other thing that goes along with that is just as the internet, I don't know if you've heard of the internet, John, has
The
expanded.
interwebs?
There's a lot on the internet. Yeah. It's a lot easier for clients and just the public to find information on how our industry works and different conflicts of interest and things of that nature. So I think when we meet with a client for the first time, generally speaking, they're coming to us a lot more educated about either different types of financial advisors, different types of accounts that can be offered, different fee structures. So I think that's a good thing. I think people coming in more educated forces the advisors to do a better job. It
Mm,
forced more transparency.
yeah,
Now, in the
yeah,
modern world, most of the time, the fee that you're paying the advisor is printed right on the statement. Where if you go back even 10 years ago, a lot of times it was some kind of embedded fee structure
mhm.
that didn't show up completely transparently. So I think that's a big change. Technology is going to continue to evolve. I think there's be a heightened sense of awareness on how things work.
I think you just brought something really interesting up. I think that the transparency is probably the most important thing that has happened in the industry on just a broad scale, you
Yeah,
know?
that's always gonna be a good thing. I've also
Yeah,
noticed
I think so.
a lot of younger people that want to be advisors, recent college grads. I think they want to get into this business, or maybe they want to get in this business. They're coming in a lot more
Oh,
educated too. So when they have a career opportunity to go to
yeah,
XYZ firm, they're a lot more critical of all the same things, whether they truly own their business, whether there's conflicts of
yeah,
interest,
yeah.
whether they're learning the right financial planning, or if they're just being plugged into kind of a sales role. So all of that is just evolving where the talented young people go, how they interact with the clients, what the clients know going into it. So to me, it's all encouraging. I think it's all a good thing.
Yeah, and that's interesting too, because one thing we do know about this upcoming generation and a little bit of ours as well is that one of the biggest ranking far beyond compensation is their want to be a part of something bigger than themselves, which I think is super, super interesting. When they do these polls, literally our generation, millennials and below, one of the things they rank the highest is culture and what impact am I having on the world by doing this? If I'm not building this company myself, right? What are those things that I'm doing for society, like for the world? And I think that is where that transparency, I think a lot of the younger generation really requires. I've seen a lot of young advisors more in the last 5 years, I'd say, than before leave because of that reason. It didn't feel right to them. And I think that's really important.
Yeah.
Most clients walk in and they have no idea who they're meeting with, truly. Like it's especially the way that we came up, Alex. It's like they're meeting with a friend because they asked. Truthfully.
I do find a lot more people on that first meeting when we're going through the introduction, they're asking much more well-educated questions, which is important. They know what to
Yeah.
ask now. And it might be as simple as they went on Google and said, what should I ask this financial advisor? And they got some results back and they asked those 5 questions, but at least there's a starting point. Whereas I think 10 years ago, people sat down in our office and they just didn't know what to ask or where to start.
Yeah. I'm gonna go now and change gears to another question that you didn't ask, but you did email me before, and I'm gonna throw it back on you because you didn't have a chance to throw it on me, and then I'll answer as well. But what is the main thing? And be a little vulnerable here, Alex.
Okay.
What is the main reason that you've obviously lost clients before? There's no way that you're batting 1,000.
No one's ever left me, John.
What do you think? Now, you don't have to speak on your personal experience if you don't want to, but I'm really interested in this question because I've been thinking about it. Why do you think the main reason that clients leave their advisors are? I've got some opinions as well.
Okay. Yeah. I like the question. I'll be vulnerable and speak from experience. I think a lot of it goes towards having that right chemistry in the beginning. So there are people that have the best of intentions to get involved in financial planning. There are people that, for whatever reason, just might not think I'm the right guy for that. And you never really get the
Mm,
right connection there on a personality. I can say I'm not for everybody, and that's okay. But there's a lot of people that I really click with, and we have a great relationship. And I think it's a powerful thing. To make it a really simple answer, why do people leave their advisor? I think it is 95% of the time about communication. It is
mm,
very rarely anything to do with a rate of return or the fintech software you're using. It is a lot of times you hear clients say, I haven't heard from my guy or my girl in a year, 5 years, or something terrible like that. For myself, I can say that's not the case. I know my clients hear from me on a regular basis. We take pride in that. But
mhm.
that's usually the number one reason somebody is leaving their advisor is just lack of communication.
I 100% agree, and I would say lack of communication and lack of understanding or listening on the advisor's part. Like I know I was victim to that back in the day. Absolutely, I was victim to that where maybe I totally didn't understand what my client really wanted. And asking better questions and actually listening to them would have solved a lot of the issues that they may have had. I think you're right. I can't remember a client that ever left me because of rate of return or performance. I had a lot of clients call and ask about that and be concerned with maybe market trends. But I don't think I've ever lost a client that way. That usually is the start, though, of some discontent between you and the client. If they're calling you and being pretty aggressive of why your portfolio is down, you probably haven't done a good enough job of building that relationship and educating your client. If you're having bad market days or it's like a bad week, you should absolutely be proactively reaching out to your clients. And that's something that I didn't do because you're always scared, especially in the beginning of business. Again, something that most people don't understand. Like you're fighting for your life, like you're at least your employment. You're definitely not fighting for your life, but it's at least your employment. And so clients matter to young advisors quite a bit. Like,
To anybody, right? I don't think it stops the
right.
advisors, but and
Yeah.
it's
No, it's
I
true.
think over communication too. So I'll use
Yeah.
COVID as an example. COVID happens, market's down, whatever was down, accounts are down 20%. I think any advisor should be reaching out to their clients even more than normal, explaining what's going on. And really, I think people at the end of the day, they just want to know that you're paying attention. If their account's down 20%, they don't hear from you. That should be a red flag, I think.
You would think so. Yeah. Again, it's just not listening. I think that you can learn a lot. I know that there's a book called The Five Love Languages. There's also another book called The Five Languages of Appreciation for the Workplace. It's honestly the same book. But it's one's for the workplace and one's for your relationship. It's a great lesson though, honestly. And you can't take, it's not like a one for one. You can't take everything from it, especially in finance, but it is a good example of like your clients need different things. I know that there's probably a lot of people out there that really appreciate birthday cards and shit like that, but I don't. It doesn't matter to me. But what I want from my financial advisor, he knows this, is that when I reach out, I just want him to respond. That's all I need. That's literally all. I don't need golf. I don't need dinners. I don't need birthday cards. All that stuff is really nice and very cool. But the only thing I actually need is 24-hour text back. Like, I'm going to text you today. I expect to hear back from you in that 24-hour period. And I think that's pretty reasonable. And I think that's what needs to be communicated. And that's what I see, is that there's just like lack of understanding between the advisor and the client of what they actually want.
Yeah, I think it's like anything else. Sometimes I think we overthink how to start the conversation or where to start, but sometimes just honest, what do you expect from me? Or what's on your mind today? And make sure you make that thing a priority. Very cool. Jon, I appreciate you coming on. Welcome to the Roadmap to Retirement podcast. Thank you for all our listeners, and thank you for everyone that helped make this possible. And until next time.
Thanks, Alex.
Disclosure. Content here is for illustrative purposes and general information only. It is not legal, tax, or individualized financial advice, nor is it a recommendation to buy, sell, or hold any specific security or engage in any specific trading strategy. Results will vary. Past performance is no indication of future results or success. Market conditions change continuously. This commentary reflects the personal opinions, viewpoints, and analyses of Alexander Neri. It does not necessarily represent those of RFG Advisory, their clients, or their employees. This commentary should not be regarded as a description of advisory services provided by Alexander Neri or RFG Advisory or performance returns of any client. The views reflected in the commentary are subject to change at any time without notice. Advisory services offered by investment advisory representatives of RFG Advisory, a registered investment advisor. Alexander Neri and RFG Advisory are unaffiliated entities. Advisory services are only offered to clients or prospective clients where RFG Advisory and its representatives are properly licensed or exempt from licensure. No advisory services may be rendered by RFG Advisory unless a client agreement is in place.